All right. Welcome to Coffee with Markus, episode 229. But who is counting, right? So today, super interesting. Today, I'm going to show you a real life example of a wheel strategy trade that will show you how I went from a $20,000 loss to a $6,000 profit. And then, as always, I'll show you my current trades and I'll answer your questions. So post them right here in the chat and let's get started. We have a lot to talk about. This show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started. The audio is off. Okay. There we go. Got it. Found it. Fixed it. There we go. All right. So, again, for those of you who couldn't hear me just a minute ago, as I promised you, I will show you a real life trade that took me here from a $20,000 loss to a $6,000 profit. And so this is the trade that we are talking about. And it is CLF, Cleveland Cliffs. Yeah, it is Basic Materials, a steel company. So let's just actually run through this trade. So on January 18th, Cleveland Cliffs popped up on the scanner, and here's what I saw. I saw that the lowest low indicator was at 1950, and I saw that there was really some good premium in the 20 put. And this is what I did. So let's actually dissect the trade. On January 18th, 2022, let's do this. I sold 50 of the CLF 20 put, expiring January 21st, so just 3 days later, and I sold it for 10 cents. So doesn't really sound like a whole lot, but that's $500, and for 3 days, that is not a bad trade at all. So let's just zoom in so that we can see it a little bit better, and I'm moving this over so that you see of what's happening. And again, sorry about the audio problems. Well, this is what happens when you go live. Okay. So let's actually walk through the chart here and see what is happening. So clicking on there, 2 days later, this is where you see that CLF right now is trading all the way down here at $16 and something, and I'm getting assigned. So January 21st is when everything expires, so I'm getting assigned on Saturday. So we actually need to see of what is happening here on January 24th. So let's actually talk about this. So on January 22, 2022, I get assigned 5,000 shares, and I have to buy them at $20 per share. So and I know that while I'm typing it, it's a bit small, but here you can see it better. And oh boy, what is happening? This thing is just moving down. Holy cannoli. So immediately I'm in the hole here. But let's see what's happening. So obviously, when we are trading at $16 and something, I cannot sell calls. And when we talk about the wheel strategy, it actually consists of 3 steps. Number 1, we're selling puts. I've done this. Number 2, we're getting assigned. Done. Number 3, we're selling calls. But when we are so far away from our strike price of 20, when we are $4 away, we cannot sell puts, because what I'm looking calls. Because what I'm looking for when selling calls is that I want to see at least 30% annualized. When I'm trading these calls. So that is not happening, and it's like, ugh. Not good. So let's see. We have to wait a little bit more. And so right now, January 24th, January 25th, it's still down. January 26th, down. January 27th, down. January 28th, it's just piddling around there between $16 and $17, and I cannot sell any calls. So I'm sitting on this one. Oh, there we go. We are now on January 31st. It is bouncing back a little bit. And then finally, here we go. On February 1st, we're moving all the way up there. Little follow through on February 2nd, and now that we are trading at $18, now I can sell some calls. So this is what happened on February 2nd, 2022. Ha, what a date, right? So now I'm able to, and again, you will see it here in a moment. I know that right now it's a little bit small. Now I'm able to sell 50 CLF 20 calls with an expiration of February 11th, and I can sell them for 35 cents. And this might not sound a whole lot, 35 cents, but since I'm selling here a total of 50, this is $1,750. Okay, so there we go. That is good. You see, this is why I like getting assigned, because the real money happens when you start selling calls. So now, if we are trading above 20 on Friday, February 11th, in this case, I will get called away. I'm not making any money on the stock, but I would keep the premium of $500 and $1,750. So that's a total of $2,250. Well, not bad at all. So let's see of what is happening. Again, right now we are looking at February 2nd, February 3rd. We're getting up there. February 4th, we're hanging in there. February 5th, not bad at all. February 6th, there we go. February 7th, woohoo! It seems that we're getting called away and that I can just keep the $2,250. But then, no, what is happening on February 11th? We are trading lower again at 1857. And this is where on February 11th, right here, if we had traded above 20, I would have gotten called away. But since we are trading below, I can continue this whole journey. And here's what happened. On that day, since I see that I'm not getting called away, so on February 11th, which is expiration day, I'm actually rolling. I'm rolling this call. So what does this mean? Well, I'm writing it down here. So I'm buying 50 CLF 20 calls. So I'm buying back the February 11th for 24 cents. And at the same time, let me just see if I can copy and paste it to make this even quicker. I'm selling 50 of the CLF 20 calls for now February 18th. So a week later. For this, I'm getting 64 cents. So as you can see, as I'm making this bigger here right now, is the font big enough? I can make the font maybe even a little bit bigger that you can easily see it. How about this? Let's put this up to 28. There we go. All right. So as you can see, the difference here that I'm getting is 40 cents. So what does it mean? It means that I'm actually, let's move this over. Space. You get the idea, okay? So 50 times 40 cents, which is the difference, I'm receiving $2,000 in premium here. Okay, not bad at all. And I see that this is not as far over as I want it to be. There we go. Now it's kind of lining up, kind of. You get the idea. Okay, so let's see what's happening. Now, if CLF right now on February 18th close above 20, I'm just getting called away and nothing is happening here. So now we're moving lower and we're moving higher. And we're moving higher, and we're moving lower. And right now it is February 17th. And again, we have to be above 20 on February 18th here. So don't know what will happen. Let's take a look. No, we are again on February 18th below, so we're not getting called away. And this is where I decide, you know what? Let's just roll one more time. And being a little bit lazy here, and in order to make this even quicker for you, I'm actually abbreviating it. There we go. So on February 18th, I'm rolling again. What I'm doing right now is I'm buying back the February 18th call, and I'm able to buy this back for only 5 cents. And I'm able to sell the one expiring on February 25th, again a week later. Oops, there we go, for a total of 43 cents. So this means I'm getting a 38 cents credit times, well, this was 50, times a 38 cents credit. And let's use the handy dandy calculator. This gives me $1,900. Okay. So let's see if we can move this somewhere where it's easy to read. So again, on February 18th, I'm rolling on this particular date. So I'm buying back the February 18th that I previously sold, as you can see, for 64 cents, right? So I'm buying these back for 5 cents and I'm selling some more calls. The difference between these two, so my credit is 38 cents times 50 contracts, it's $1,900. All right. So let's see what's happening. Now we have another week on February 25th. We need to make sure that we're above 20. If we're below 20, then I can roll again and just keep playing this game. Why not, right? So let's see. Now we are on February 22nd, February 23rd, February 24th. Wow, what a long bar on February 24th. And here we go on February 25th. CLF jumps all the way up to 2150, and I'm getting called away. So let me just show you here. This is actually on February 25th. It is happening. So on February 26th, which is a Saturday. Oops. That didn't go well. There we go. Okay. So on February 26th, stocks called away, and I'm keeping all of the premium. So how much is it that I received in premium here? So the premium received on this trade is exactly $6,150. Now, this is where, keep in mind, and I'll see if I can show this here in a bit better way in just a moment. But keep in mind, at some point, we were as low as 1581. What does this mean? That while we were in this trade, the unrealized loss was exactly $20,950. And I'm showing you this example, and let me just see. Right now, CLF has been skyrocketing higher. I want to see if I can just make this a little bit easier to read. Oh, I can do this. Okay, let me just scooch this over to make it super easy for you to read, or in case you want to grab a screenshot or something like this. Okay, there we go. What do you think about that? This looks good. Okay, so the reason why I'm showing you this is, as you can see, while I was in this trade, at some point I was down $20,950. And here in the US, we would spell this with a comma and not with a dot. So it's not $20, it's $20,950. But I finished the trade with a premium, with a profit of $6,150. So the reason why I'm showing you this is, when you trade the wheel strategy, let me just come back to you here for a moment. When you trade the wheel strategy, it is important that you understand, while you are being in a trade, you can have an unrealized loss. So these are so-called paper losses, unrealized losses, right? And this is why, for me, for example, I do not use a stop loss. If I had used a stop loss with this strategy, I would have probably realized a $10, $15, maybe $20,000 loss instead of realizing a $6,000 profit. Now you might say, what happens if this keeps going down? Well, I'll probably do another video on this, and I'll show you a trade that was just going dramatically against me, which is the LVS trade. I haven't closed this trade yet, so this is why I want to wait, because I want to show you the closed trade so that I couldn't say, oh, woulda, coulda, shoulda, because what if CLF would not have rallied to 25? What if it would have went all the way down to, I don't know, like 15 or 10, right? So we'll do a special video on this. But this is an example of how you deal with a trade when it is going against you. The most important thing is that you follow your plan. I'm following my plan. Your plan might be different, which is absolutely fine, right? I mean, everybody has a different plan. And this is what I love about the wheel strategy. The wheel strategy has so many variations, right? I mean, some people like to go out longer, right? So trade longer expirations, and that is fine. Some people like to use a stop loss. Some people might hedge it by using instead of selling a put credit spread or something like this, right? So there are many variations, and this is why I wanted to show you one of the trades that I recently did. Is this helpful at all? Because if it is, do me a favor and click on like really quick, or consider subscribing to this video, and I'll take a look at your questions here in just a moment. But I just want to bring this back here so that we see exactly of what happened, just in case you want to take another screenshot or take a few notes or whatever you choose to do here. Okay, so let me come here and actually take a look at your questions, and I see that in the beginning, I'm so sorry, I know that I messed up with the sound. Don't know how that happened, of why I was suddenly muted, and I appreciate all of the questions. And yeah, I did get the message. The problem is that there is a delay, right? So when I'm going live, there's probably a 30 to 60 second delay of when I see your message and when I can react to this. Anyhow, so Griffel says, I just what to do if I'm willing to get called away, rolling up, just leave it and enjoy the premium I've received, how you do with this. So, okay, the question is, okay, what do you do with this trade, for example, when you see that it is shooting up and you say, I'm getting called away, I don't want to get called away. Well, in this case, you shouldn't have sold the 20 call, right? So here, for me, it was not worth rolling up. This is where at some point, okay, if this trade runs up, shoots up, I'm taking my assignment here, so I'm getting called away, and I'm very happy with a $6,000 150 premium. So this is where I wouldn't worry about it too much. There we go, Griffel, right? So you could roll up. I honestly thought here that CLF is going a little bit too crazy, especially with everything else going on right now. So as you know, right now, the market is under pressure. CLF is shooting higher. So and I'm wondering, why is that? And there's probably a logical explanation, but nothing comes to mind immediately for me. And when there's something that I don't understand, I'd rather get out of this and look for other opportunities. And we'll talk about the trades that I'm in here in just a few moments. Okay. Good. So chat says, why didn't you roll up to the 21 calls? Because I couldn't get my at least 30% annualized. In fact, when I'm rolling up, I'm looking for 60% annualized. And here's why. Because if I would get called away, right, then I would start over and I would sell puts. When I'm selling puts, I'm usually looking for 30, 35 to 40% annualized. So if I'm sticking with a trade, I want to see at least 60% annualized. And this is what happened here. This is where it kind of goes back with the bird in the hand versus the two in the bush, right? So I either can collect a lot of premium for the 20 or less of a premium. And this is where you see in hindsight, let me just zoom in here a little bit again and show you this particular trade. See, in hindsight, yeah, I should have rolled up to the 20. Here's what happened, right? I mean, first this trade went against me, $20,000. Then it bounced back up, and then look at this. Now it came back down again. So when you see this in real time, I said, okay, can this really bounce back to 21? Or is it time to get out of this one and say, as soon as it bounces up to 20, I'm out of there? And this is where, again, every trader is different. And that's a beautiful thing about the wheel strategy. I mean, you can trade it any way you want. And here I chose to say, okay, if this bounces back above 20, I'm out of there. So you get the idea. But it's a great question. So you could roll up here. Well, yeah, and Alan said it. I tried to achieve 60% annualized RI. And this is where I can't remember exactly how much I got there. Okay. So yeah, 5,000 shares for 21, 25%, 20% of my portfolio. That is correct. I like to trade up to 5 positions. So I'm allocating 20% to each position. And if you feel that this is too aggressive, if you like to be diversified over more trades, I mean, we have many students who are diversifying over 8 to 10 trades. That's fine. The reason why I like to choose 5 trades, if I had to fill 8 to 10 slots, I would feel a lot of pressure of finding trades, right? And it's easier for me to find 5 positions at any given time. And again, Alan, this is where whatever makes you most comfortable. If you prefer to have more than one position, you can do it. If you prefer to have less, I think that's super risky to put all your eggs in one basket. So for me personally, my ideal mix is 5 positions. Okay. Yes, so this account, Gary, by the way, this account, I put $250,000 in cash in there, and I'm using margin. So it is a margin account, and I'm using $500,000 in buying power here, and I'm dividing this buying power over, yeah, what is it? 5 different positions here. Yep. So in the CLF example, David asks, had you skipped the calls and put in a limit order to sell at 2150, you would have gained 5,000. Sounds better than the $6,000 in premium. Yeah, you see, it's always hard to say. In hindsight, yeah, if I had done this, and you see, it's difficult, Dave, when you're looking at the chart and say, oh yeah, at 20, if I had sold it here at 2150, well, it hit the high, right? I mean, keep in mind, at some point here, I was actually down $20,000. So when you're $20,000, you're not getting greedy. You're following your plan, and I'm following my plan. And my plan here was because at this point, when it reached the 2150, I did have a call sold, the 20 call sold. So I cannot sell the shares without selling this call. And I would have had to sell the call at a loss, and I was not willing to do this. So because it's kind of basically a wash, the money that you make on the stock, you would have lost on the option. So this is where, yeah, in hindsight, you know what? In hindsight, I should have bought it at 16 and sold it at 2150. That's what I should have done, right? But this is why I'm showing you a real life example here, and I think the real life examples are different than when you're just looking back at the chart and say, oh yeah, you could have done this and could have done that, but you get the idea here. Okay. Good. So what else? Yeah, Jim says, which of some of my lazy boyfriends? Yeah, not all of them do this. And this is why I fly rescue missions. And I'll do another video with a real life example of that. I just want to close the trade first so that I can really walk you through every single step of this trade, and then have a real life example. And I'll do this. Dan says, any thoughts on these crazy markets? Yeah, that they are crazy, and that I like the volatility. Because if you look at it, higher volatility helps us as option traders to collect more premium. So I'm very actively trading the market. Okay, I just wanted to see that I'm not muted again. So we are trading at elevated level of around 30 to 38 with the VIX. This is the fear gauge, and for me personally, I'm loving it. So I like to collect a lot of premium. We have a lot of really solid value stocks popping up on the wheel scanner here right now. So absolutely. All right. So M says, how do you measure risk reward? For me personally, with the wheel strategy, it's incredibly difficult to measure the risk and reward, right? So because ultimately, what do you have to see? If I'm committing this $100,000, if CLF would go to 0, if it would go from 20 to 0, I would lose the $100,000. What is the likelihood of this being happening? I don't know. Yeah, how do you quantify this? What is the likelihood of a stock like CLF or Bank of America or United Airlines or LVS or stocks like this to hit 0? There's always a possibility, and how much is the possibility? So this is where it's really, really difficult for me to quantify the risk and reward. Anyhow, so Nick says net premium received would be lower since some options were rolled and didn't close at 0. No, the net premium is exactly what I said. Trust me, I subtracted it. So I did the math right, and I did do the math twice before I came live here. So trust me, this should be okay. Kevin, herzliche Grüße zurück aus Deutschland. Absolutely. And so Brad says, can you explain how do you position sizing for options using the Power X strategy? Yeah, for the Power X strategy, it's different because there I would risk 2% of my account on any given trade, right? And this is where the Power X strategy actually shows you. So if you're looking here at any trade, so for example, FTXN, this would be one of the trades. It shows you exactly based on your account size that you have here. Let me see if I can zoom in so that you can see it. There we go. Yeah, based on the account size that you're putting in of how many options you should trade. So that's slightly different here than the wheel strategy. All right. So let's actually talk about the positions that I'm currently in, shall we? So let's go through a few of the positions, no, not a few of the positions, all of the positions here that I'm currently in. So the first one that I have is, so as you know, did I forget to share the screen? You get the idea. Okay. Anyhow, okay, so let's actually go now back to the screen share. There we go. Okay, so actually before we do this, as you know, right now I have two accounts. I have a Tastyworks account in which I'm unwinding the positions because it was not easy to have all the existing open positions transferred over into the Tradier account that I have right now. This would have basically paralyzed me for 2 weeks where I couldn't have traded. And I mean, this was in January, and January was just awesome to trade. As you know, I did a video on this. I realized around $22,000, $23,000 maybe in profits in January. So that's what I've really heard. So the idea is that in the Tastyworks account, I'm having right now still 3 positions that I'm unwinding. I'm not taking any new positions in this account, but I'm managing the existing positions. So let's talk about these first. So the first one here is ARGF, and that's super, super interesting. So ARGF, let's talk about this. I was assigned at 47.50, and this is here one of the stocks where right now I'm flying a rescue mission. So the idea here is that I'm selling more puts at the 28 level. For me, the 28 level is some solid support. If ARGF trades below 28 by tomorrow, I will get assigned another 1,200 shares at 28. So this means that I then have 3,300 shares, and my cost basis gets lowered from 47.50 to around here. Let me just mark it on the chart, to around 41, somewhere around here. Okay, so I find this more manageable, that there's possibly a bounce, and you see, if there would be a bounce to probably around 37, 38, I will be able to sell calls. So that is my plan here. And again, I'll do a dedicated video to rescue missions over the next few coffees with Markus here. We don't know what happens. Today is Thursday. They closed below 28. And as you see, they've done it a few times and then bounced right back. So we'll see what happens tomorrow. So this is one of the positions that I have in this account. The other one is LVS. And LVS, boy, has this been fun to trade. So LVS, this is one where I initially got assigned at 58, way up here, okay? And this is where I flew 2 rescue missions, not 3 yet, and have been able to lower my cost basis to 46.86. And you see here, I had a really cool trade that happened actually yesterday. So yesterday I sold against my existing position here, 36 of the 47 call expiring tomorrow for 35 cents. And today I was able to buy them back. So I made a profit here of 1,152 in only 24 hours. So I am liking that. So this was actually a really good trade that I did yesterday. Yeah, yesterday and today. Opened it yesterday, closed it today. So beautiful, like this. Then in this account, we also have Lordstown Motors. So what's there to do? Nothing to do for now. We'll see. Markets just closed. So we are closing here at, this is hard to see, $2.38. So nothing to do. I'll keep you posted what I do here with this trade. Now let's hop over now to the Tradier account. So in the Tradier account, the first position that I have here is ADI. So this is where I originally sold the 160.52 puts, and I got assigned at 162.50. And as you can see, this here is one of the most beautiful things that can happen to you after you are assigned. Because it goes down, it goes up, it goes down, it goes up, it goes down, it goes up. It is like, oh, mwah. This is where I collected a lot of premium. So I'll tally it up in the next coffee with Markus when I'm looking at how much money did I make in February. And once I close the whole trade, I mean, here I rolled this again last Friday, collected an additional $1,350 in premium. And I don't even know how much I made in premium on this one. This must get close to probably $10,000 at this point. But I'll keep you posted and I'll let you know exactly of what's happening there. All right, another stock that I have in this account is BAC, Bank of America. Sold the 41 put expiring on Friday. As you can see, Bank of America right now has been dropping a little bit. Trading currently at 42.49, so we will see what happens tomorrow. If tomorrow we are staying above this, I'll just keep the whole premium. If we are going below, I get assigned Bank of America, and I don't mind owning Bank of America at all. All right, what else do we have? We have IWM. I have IWM in this account. This is the Russell, and that is another beautiful, beautiful, beautiful one. Let me click on auto here. So assigned on at 205, and as you can see right there, bouncing up, bouncing down, bouncing up, bouncing down. So on Friday, I sold more calls expiring this week for $2, made $1,200. And we'll see if by tomorrow we close above 205. If so, I'm getting called away. I might roll this one. Today there was an opportunity to roll, but very similar to what I did with the other trade here, with the CLF trade. I might consider rolling this tomorrow. So we'll see what happens there. Okay, so ADI, BAC, IWM. We have TPR. That is a new trade that I entered there. And I sold the 37 put, expiring 3/4. So we'll see. Collected some premium. Right now we are trading TPR, yeah, at what is it here? 39 something. So we are good to go. So collecting the premium here right now. And let's see, there's probably one more stock that I'm forgetting, because I thought that I have one more in there. Oh yeah, UAL, United Airlines. Okay, traded United Airlines earlier this week. UAL, gotta love this. So here, let's just zoom out a little bit. I thought I marked it on the chart. So I sold the 39 put. So let me just do this here. So this is where the horizontal line, let's put it in here. So 39, and this is where I sold 39 put, expiring March 4th. So we'll see what happens there. Let me zoom out a little bit so that you see it. That's where we are at. So today we're trading at 40 something, but we're good to go here. So these are the positions that I have in my portfolio right now. And yeah, in the upcoming coffee with Markus, I'll show you of what happened here in February, because there is, let's see. Yeah, I see. I didn't share my screen, and Jerry Jung said, did you make your monthly goal for February? Well, let's see. In the next coffee with Markus, I'll show you exactly how I did in February. Okay, so Suresh says, are you not going to be using Tastyworks after unwinding these trades? No. So all of the money out of this account will be then transferred back into my checking account, because this is where I used that money basically to fund the Tradier account. So I need to do that. Okay, so version, oh yeah, it was CLF. Sorry. Oh yeah, I see it here. Tune in late. Which trade? So it's that one. Okay, cool. So are you watching some sectors for the rest of 2022? No, I wish I would be smart enough to know what sectors are going up or down. So for me, the whole sector game doesn't make sense. Because I thought that 2022 financials would do really well, right? I mean, duh, go figure. Interest rates are going higher, so banks will make more money. And what happened to banks over the past week? They got hammered. So trade what you see, not what you think. So I mean, don't even ask me for sectors or my outlook for the year. I mean, I'm happy if I have an outlook for the remainder of the week. So yeah. Atatopal says, when is the best time to roll during expiration day? You see, usually it's any time during expiration day. The closer you get to expiration, of course, the more of the time value is getting sucked out, right? Because on the last day of expiration, all of the time value will disappear. I often roll in the morning because that's my time to trade. I usually just trade the first 30 minutes of the day, and then I'm done and I do other things and I'm not sitting glued to the screen here. So that's why I do it. If you can watch the markets, I would watch it probably going into the close because, again, the closer to the close, to the actual expiration, the less time value you have there. Okay, so we will see. And wannabe trader, there. Missed joining you till now. We'll catch the replay later. Absolutely. Not sure why you don't subtract your cost premium on each stock you sell calls because you're lowering your cost basis. Not quite sure what you mean, Janiel. If you think about the premium, so there's a difference between the cost basis, right, and then the break even. So if you're thinking about the break even, yes, the break even is the cost basis minus the premium that you have received, if this is what you're talking about. If you're talking about commissions, I'm not paying any commissions. So therefore, I'm not subtracting. All I pay is what everybody does, is the NFA and the exchange fees, right, which is a few cents for every trade. But I'm trading with Tradier, and for me, that is commission-free here. Okay, good. So Rochester says, this wheel strategy doesn't seem to be working out there so well. Really? How is that? Because, I mean, again, in the next coffee with Markus, I'll show you how I did it for February. For January thus far, overachieved my goal. Was planning to make $15,000, make $23,000 in January. So for February, stay tuned. Don't want to give it away. So Rochester, tune in. And I'll let you know how I did in February with these crazy markets, right? Because, yeah, the markets are crazy. Volatility is high. As an option seller, this is what we like to see. Oh, yeah, there's Kathy. Up 24% so far in 2022. I'm not telling you where I'm at. That's what I'm doing in the next one. All right. Good. And Rochester, if you haven't watched this, maybe rewind because this is where I'm showing here an example of a trade where it dropped actually 20%. I believe, let's go back to the trade here really quick. But the example that I showed you here, I believe I entered at 20 and it went all the way down to 16. Yep. So Rochester 3, this is exactly, I've shown you an example of a trade that went down 20%. Okay, so take a look at this. If you missed it, if you just tuned in, do that. Anyhow, hey, this was fun today. If you liked it, click on like and tune in for the next one, because in the next Coffee with Markus, I'll tell you of what I did in February. Did I achieve a goal? Did I miss my goal? Did I overachieve my goal? If so, by how much? Did I underachieve? Was I not able to collect enough premium? And if so, how much? And where do I stand after these 2 months? Anyhow, hope that helped. Have a great rest of your day. Give me a like on your way out, and I'll see you in the next video. Take care.